how one rule made me $300 in one day. You ever have a week where one stock just wouldn't quit? It just kept paying you over and over again? That's what happened to me with Apple this week. And no, it wasn't luck. It was one simple rule I've been following for years. I'm going to show you exactly how it worked so you can see why this rule is so powerful. This week, Apple hit my pruning target, $100 profit. When I prune it, when it hits $100 profit, I take $100 off and then let it do its thing. Not once, but 3 times in 2 days. Normally I'll prune once and move on. I'll do it when I get home, or I'll do it in the morning and not mess with it again. But I happened to be off work Friday, so I did it early in the morning, about when the market started. I was like, cool, I can prune Apple. And then about a little after lunch, noon, 1 o'clock, whatever, I was needing a break from what I was doing around the house, and I went, let me just check it again. And still was over $100 again, so I popped another $100 off of it. And then I wanted to do it before the market closed, and I forgot. And most likely, if I did it before the market closed, I probably could have pruned it a third time in the same day. But I forgot. And after the market closed, it dropped under 100. It's like at 99, but that's not my rule, So I'll wait till Monday and see what happens. Normally I'll prune once and move on. But I happened to be off Friday, so I got to do it twice. Every single time Apple crossed that $100 profit line, I pruned it. Now here's what I do with those pruned profits. I put them right back into my portfolio, but not just anywhere. I always invest in whichever of my 35 foundational stocks that I have, the 35 that I have on that's super rounded, and 15 of them are my base that I talk a lot about on here, and 15 are my more aggressive that the price goes up and down, but I'll probably make a good dividend off of them. And then my 5 super safe stuff for when I get closer to retirement in the next 10, 15 years. I just have it on there so I can watch the bonds. It just so happened that this week, the 2 slowest moving stocks were Eli Lilly and Procter & Gamble. They're both part of my base 15 that I started with, which is the core group of the stable long-term plays that I'm invested in. So every $100 from Apple got split between those 2. In total, Apple handed me $300 in just a couple days. And every dollar of it went right back into positions I believe will be long-term growth. Eli Lilly and Procter & Gamble at the bottom of my list right now. My rule is simple. When one of my foundational stocks hits $100 profit, any of my stocks, not just the base 15 out of the 35, any of the 35, even if once I get enough money in my my bonds, if it ever profits $100, it's coming out too. Like I say, the bonds usually stay in the middle, so I just put $50 in them and didn't worry about it, just so I can see and watch how they work. That's how I experiment. I don't experiment often, but when I experiment, I'll put $1 or $50 in it just to watch the market work in it and see what I want to do with it. My rule is simple. When one stock hits $100 profit, I prune it. No hesitation. No second guessing. I don't say, what if it keeps going? Why didn't I let Apple get all the way up to $300 profit? Simple answer. I buy at this price. The market moves up. So at this price, it's $100 in between profit. But as I buy, my buy price fluctuates up or down. So the next time it may take more for 100, it may take less, but usually it takes more because I'm chopping off at the lowest price that I bought of the profit. That's why it moves. That's why I probably wouldn't have been able to do 300, wait for it to hit 300. but I could pop off 3 $100 profits to get that 300 and invest into the bottom. I don't say to myself, what if it keeps going? I don't wait for some magic number. I take the win when the win is there. I take the $100 and move on. Yes, I could leave it there forever and be fine with that. But I wouldn't hit that great cycle of Eli Lilly is super low right now. So when it pops up, I'm buying really low right now in Eli Lilly. I believe in it. I trust in it. I'm still going to keep investing in it, even if it stays at the bottom for a while. Look what happened. Apple was at my bottom for a while, and I just pruned $300 off it. Look what happened to Ford. Ford was at my bottom, and I probably pruned $500 or $600 off of it and put it down. So it's a cycle. Why do I take the win when they're there? Because by pruning at a set profit point, I lock in gains while the stock is high. And I instantly strengthen my lower positions that are due to come back up. And remember, I'm getting dividends on all these. So I'm getting extra dividends off of them because I'm popping more money into the lower ones, even if their price is low right now. So I'm instantly strengthening a weaker position. This week, that process worked perfectly. Apple was my top performer. Eli Lilly and Procter & Gamble were at the bottom. By moving money from the top to the bottom, I'm constantly balancing my portfolio. And I'm smoothing out the highs and the lows. Sometimes my lowest performers are in my base 15, like this week. Other times they might be in the momentum 15, the more aggressive stuff. My freedom stage usually stays pretty safe and stays in the middle. So the original investment I put in them to watch them, it's probably going to stay there. But the point is, I'm not chasing hot stocks or guessing what's next. I'm just following a process. I have a plan, my plan, and my plan's been working great for me. You'll create your own plan, but you got to start. If you need a start with my plan that we've been talking about. Start with anybody's plan, but start with it. And then you'll develop your own strategy. Your strategy may be to leave it in there. Your strategy may be to leave it till it hits $200 profit. If you're new to investing, here's the lesson. Have a clear, repeatable rule for when you take profits. It doesn't have to be 100 like mine, but it does need to be something you stick to. That way, when opportunities stack up like they did for me this week, you don't have to wonder, should I sell? Should I wait? You already know your answer, and you can move fast enough to take multiple wins in a market that gives you when they give them to you. Because the market, if you wait an hour, it could drop. If you wait an hour, it could go up. But why worry about it? You got your profit. So that's how one simple rule turned into $300 from Apple in just days, without guessing, without stress, without losing sight of the bigger plan. And now that $300 already hard at work in my weakest position, waiting for their turn to shine. Remember, I'm not an advisor. I'm just sharing what I'm doing in my own portfolio. This isn't advice for what you should buy or sell, but hopefully it gives you an idea of how having a plan can take the emotion out of your investing. If you want to see how I apply these same processes across the 35 of my foundation stocks, make sure you stick around for the next couple videos. Because we're going to be talking about last week what I did, but in a different perspective. See you next time.